There is no doubt that in today's market, you can actually raise that money for that exploration activity, right? But you'll need a lot more exploration than you currently have ongoing to generate that future supply base that's needed.
In our case, we've really built the whole project up to be zero carbon and really, I guess, a combined integrated renewables and resources project. And I think we're going to see much more of that across the industry going forward.
Okay, so let's get started while we wait for everyone to still join the webinar. I'd like to welcome everyone today to the Assay Live Supply Constraints and the Energy Transition session. Joining us today, we have Bert Koth, Managing Director and Partner at Denham Capital Mining Fund. And we have Francis Wedden, Managing Director of Vulcan Energy Resources, Zero Carbon Lithium. So thank you to Bert and Francis for taking part today.
Thanks, Amy, for having us.
Absolutely.
Yeah,
and
thanks.
So just for the audience that we have here today, I'd like to remind you that we have received all of the questions that were submitted in advance, but we will also be taking questions throughout the course of the webinar. Please feel free to type in any questions that you have in the Q&A box. That's the easiest place for us to access them. And then we'll get to the questions as they come in. And so, yeah, let's begin. So really one of the biggest threats to a successful energy transition is the looming shortage in the raw materials that are needed for batteries, renewable energy production, and other industrial products. So this session is going to look at how we can encourage further mining exploration to help source some of these crucial materials. And so maybe I'd like to ask Francis to kick us off here. Can you talk a little bit about what sort of constraints are the mining companies facing today?
Yeah, I mean, if you'd asked me a year or two ago, I would have said it was funding. But I really don't think that's an issue anymore. I mean, we're living in this really unprecedented time where there is large amounts of funding available for exploration and mining companies. I think if you're not able to raise capital for your exploration or mining projects in the battery metal space at the moment, then you should be concerned really, because this is probably one of the best markets I think that certainly I've ever seen to do that. So it's not funding. I think most companies are under a tremendous amount of pressure now to produce results very, very quickly because of this supply-demand thematic that we're seeing in battery metals. So the customers want products and they want it yesterday, really. And certainly over the course of the next 1, 2, 3, 4 years. So there's a tremendous amount of pressure, I think, to turn around resources projects quicker than perhaps has been the case in the past. And that's because the mining industry now is servicing a very fast-moving industry, which is the electric vehicle industry, the battery industry, which is moving forwards very, very quickly. So I think it's time more than funds, which is the main hurdle, and just satisfying that demand. And then I guess time comes back to executing on a project technically and executing on a project in terms of permitting. And I think what we're seeing there is, once again, governments across the world are typically in this sector are relatively slow moving. Obviously, it depends massively where you are in the world, but I think what we're sort of seeing across the board is that the permitting will be one of the major bottlenecks, I think, for getting these projects moving forward. So yeah, I don't think it's funding. I think funding is the least of everybody's worries in terms of satisfying this demand.
Great. And where do you see that funding really starting to come from?
Well, in our case, I guess a lot of it is sort of ESG focused institutional funds, both in APAC, North America, and Europe. I think and something else that's changed over the last 18 months has been, the retail markets is much stronger and arguably leading the way versus the institutional market in terms of where listed markets go and where listed companies go. And I think they have a lot more sway now. But in terms of the funding that we've done, I think it's been much more from that sort of ESG focused institutional space. And I'd say for the battery material space, I think a lot of it is coming from that side. It's not, we're seeing some strategic players in the space also starting to enter the funding for these resources projects, such as automakers, battery makers. There's certainly interest there, but it's slower moving. So it's sort of more of the longer term strategic money. But certainly in our case, it's been those ESG focused institutions to date.
And to bring Bert in here, Bert, what are you seeing in terms of the funding that's coming available? What's your role kind of been throughout this, and what?
Yeah. There's for sure a lot of equity in the market, especially for those thematic metals like lithium or nickel. There's no doubt about that. What we are seeing, and this is, by the way, just from an ongoing live deal without being able to disclose which one it is, what we actually see that, interesting enough, in some of these more complicated metals, because a lot of these battery metals are actually in reality quite complicated market with some very nuanced commercial and technical risks. What we actually see that actually the commercial bank financing is not there. Because banks actually look at these situations in a very, as they should, in a very conservative manner, like how did the prices look like over the last 10 years, and what happens in a stress case if you run the prices, whatever, on an 8-year price low. And the markets are often not transparent. These are not, in some cases, not listed prices in some of these battery metals. So we actually see the equity is interestingly readily available. But in some cases, actually, every situation is different, by the way. I mean, it's not really so easy to make just broad brushed comments. But what we certainly see in some of these battery metals, that actually the bank debt is not available. And so there are then situations where, for example, more specialized mining funds step in, like us, with whatever, some bespoke debt facilities, whatever, that have a royalty and have definitely a much higher cost of capital than the conventional bank financing. But hey, there are situations where the conventional bank financing just isn't there because the credit proposition doesn't match what these lending banks are used to. So we're certainly seeing that in a number of situations. But going to the constraints, I think what's also important to say, so Francis managed time, but I also you just compare demand as you expect it to play out versus the available supply stack in terms of projects. Yeah. Most mining projects are technically quite risky, right? Most of them have permitting challenges, and it's just in some metals and minerals, and lithium is actually one of those, where it's actually not entirely clear where actually really the supply is going to come from in the way how it's needed. Yeah. And I think I have said this on a previous webinar, I actually think that's a danger to the energy transition itself, because you actually look at these forecasts, you make really optimistic assumptions on how recycling is going to increase. And some technical people would say these are overly optimistic recycling assumptions. And then you actually look at the primary mining gap that's left on top of your analysis, and then you compare the primary mining need to the project pipeline. Doesn't matter what it is, if it's nickel, copper, lithium, right? And you just look at the reality, how many of these projects in the pipeline actually meet the requirements for commercialization. And the answer is only a minority of the projects that are in the supply stack meet the requirements for commercialization. So I, at least in some metals and minerals, cannot see honestly where the stuff is going to come from.
you've brought up lithium. Where else do you see some of these shortages coming up in the commodity space?
Well, definitely in copper. Definitely in the earth space. In nickel, there's a little bit of a debate how much of the laterite nickel you'll be able to use for battery nickel matte. We certainly have, via our business in Indonesia, regular information that out of Indonesia, battery nickel matte made out of laterite nickel is getting shipped to China. There's a bit of a question mark. Could that be a game changer in the nickel market? Just like nickel pig iron was a game changer in the ferronickel market 15 years ago. But literally on copper, lithium, nickel. But you know what? There's all sorts of smaller metals and minerals that are just not broadly discussed. Yeah, they also have a role to play, whatever it is. You know, silica, high grade silica for solar cells. You know, there's quite a number of shortages. There's quite a number of shortages in the system that one would expect a little bit further down the track, and just see what happens in the automotive industry with the chip shortage, right? So they have to cut back automotive production. Exactly the same thing might happen to electric vehicles or renewable energy itself. They just might have to say, we can't produce more wind turbines, for example, or we can't produce more solar cells because the raw materials not there.
Yeah, I couldn't agree more in terms of the risk to the energy transition, and particularly for electric vehicles, for batteries and raw materials going to them. I mean, the ambition is massive, and we're seeing in Europe for the lithium-ion battery production, they're talking over a terawatt hour of annual battery cell production by 2030, which is obviously less than 9 years away. And that equates, really roughly speaking, to around about 1 million tons per annum of lithium battery chemicals, not to mention the nickel, cobalt, the graphite, etc. And the entire world's the supply in the last year was about 400,000 tons. So we're talking about a market that is multiples of the current global market just in Europe. Meanwhile, the rest of the world is still growing. Yep. China's growing, South Korea, Japan, North America, and Europe has zero local supply. And a large lithium chemicals project, 50,000 tons maybe. So we're talking about really dozens of new projects needed just to supply the European market. And then you just think about the other huge markets that are growing elsewhere in the world. So I don't think, unfortunately, I don't think that the EV adoption forecasts are going to happen. It's exponential at the moment, but I think it's going to level off somewhat because of that supply shortage. So it's something that we're trying to fix. But even with our projects, if all the current projects got on the stream in time, we would still be very much short of where the market wants to be.
I cannot disagree. That's what all our analysis also points to that. In lithium, we in-house expect like a 16 times required increase in production by 2040. Mm-hmm. There's just no way. I think that's never happened in economic history that the production one metal, the supply has increased 16-fold annual production within a decade, within 2 decades. I think that's never ever happened before. So
yeah, that's right.
It's hard to see how that's going to happen.
That's right. I mean, it's basically a once in a century event. It's not a once in a generation event. It's once in a century event that we're going through right now. This wholesale change. So yeah, it'll be interesting to see where that shortfall comes from. And just to follow up your comments on the I guess the debt side as well, the availability of debt finance. I mean, we can't sort of say definitively, obviously, because we haven't got to that point yet. That's going to be sort of middle of next year, but certainly the early indications to us from the major development banks in Europe have been very positive. I think what we're going to see going forward is really projects that need to fit with those sort of key ESG principles of those banks. I think we're seeing more of a willingness than perhaps has been in the past to invest in and to finance these resources projects. But I think there's some pretty strict ESG criteria that need to be met.
Yeah, sure.
So you bring up ESG and looking into kind of the projects and funding. So do you see funding necessarily relating to kind of the materials themselves, or how is it impacting, I suppose, funding in terms of prioritizing like these low carbon mining operations? Do you see kind of a priority going towards those types of projects now?
Well, yeah, I mean,
anyway have to. Sorry, go on.
Yeah, sorry. I mean, it's the first question you get asked when you enter the room. Really, is what is the carbon footprint? What is the water footprint? Where's your life cycle assessment of your project? So yeah, it's really the first hurdle. Otherwise, no one will even look at you, I think, nowadays.
I agree with that. I mean, we're just going through a number of project financing processes and some other projects that we own. I would say that 40 to 50% of the engagement time with commercial banks at the moment is on ESG related matters, on CO2 footprint, on ESG compliance, on community benefit, and all of that. It's for sure a key decision making criteria before even any time is spent on technical interrogation of the project.
And we're seeing it right across the board. We're seeing it with battery makers, automakers. There's a clear intention to be zero carbon across the whole supply chain. We're seeing cathode manufacturers locating next to sources of renewable energy, ditto battery manufacturers. I think we're starting to see that in the natural resources space. In our case, we've really built the whole project up to be zero carbon and really, I guess, a combined integrated renewables and resources project. And I think we're going to see much more of that across the industry going forward.
So looking at kind of specific commodities, we've already touched a little bit on lithium. We had an audience question come in asking about what do you expect for future cobalt demand in EV batteries relative to nickel, manganese, and other metals? Do you have I suppose, do you want to provide some insight into kind of where you see things moving in terms of these types of chemistries?
Well, I mean, at the moment, go on.
Sorry, Bert, you go first.
No, it's fine. It's cool. I mean, cobalt at the moment is like 18% of the cost typical of a normal 811 battery today, right? There's clearly the issue with supply concentration risk on one particular country, right? So, I mean, a lot of work has already been done to reduce the amount in the battery in cobalt, right? But I would expect continued efforts to reduce it, just because of the disproportionate reliance on one particular jurisdiction from a supply point of view, right? So that's what I would expect to happen.
Yeah, I agree. I mean, I think we're going to continue to see quite a diverse mix of battery chemistries because there's so many different uses for these batteries, and we might even see multiple mixes within the same battery going forward. So I think we're not going to see cobalt's demand sort of drying up in the coming years. I think there's still definitely going to be a need for it, and I think what we're going to see is we're going to see increased localization and diversification, if possible, of the cobalt supply chain. We're really seeing that regionalization across the board with all metals. I think cobalt's no different. So, locally producing cobalt in perhaps North America, Europe, I think will be the focus going forwards, and really getting away from that reliance on DLC. I don't see the demands drying up anytime soon, albeit there is the ability to engineer it out altogether with different chemistries.
I mean, battery technology is in evolution. I mean, as you say, Francis, right? So I think there is no argument that a lot of additional metals and minerals are going to be required. I think there's maybe uncertainty regarding the exact composition of future demand because of all these ongoing technical changes. So I've just seen on the screen there was just somebody asking about graphite and manganese, right? I mean, again. The exact demand really will depend how battery technology is evolving, right? But these are all difficult markets. I mean, graphite you have to produce at a required spec over a prolonged period of time before you even get the first offtake agreement. You need demonstration plants. You have to compete with synthetic graphite in more advanced batteries in terms of spec. Electrolytic manganese is a Chinese controlled market. It's also so all of these things are actually fairly difficult in reality when you actually build those mines. It's not as straightforward and easy as it sometimes might read in a nice investor presentation. A lot of these things actually have real elevated execution risk.
Yep, can't argue with that. Yeah, and you know, in terms of new battery chemistries as well, because I always get asked that question. I mean, you know, the next battery technology that's on the near term or near to medium term horizon is solid state, and obviously for things like lithium, that uses more lithium atoms, I suppose, than the current lithium-ion batteries do in terms of lithium metal. So we're still going to need metals for those, and you know, likely to be similar metals. We're not going to engineer these metals out anytime soon. And you have to understand that lithium-ion batteries as well have been around since the 90s, commercialized since the 90s, and it's taken until now to get them into electric vehicles. So this doesn't sort of change overnight. There will be new battery chemistries that get developed, sure, but it will take a very long time for them to get into a vehicle.
So we've had a question come in from the audience, which kind of corresponds well with one that I was going to touch on, looking at vertical integration. Really, do you see kind of innovative ways in which this is happening? Do you anticipate increased investment from the auto OEMs directly into lithium and other raw material producers to secure supply and grow production to meet future demand?
I mean, we definitely do. I don't think it's required, but we definitely see movement in that space and increasing interest in that space. I think mainly these automakers are actually building out the competence to assess these projects, because they don't currently have that in most cases in-house. So there really is very little understanding of mining projects, of resources projects, of raw materials in these companies. In the battery chemical space. So I think they'll need to get comfortable with these projects first before they invest, but there's definitely interest there.
And Amy, I've just seen at least a message flashing up on my screen if about rare earth. If that is a supply issue, I would argue yes. I mean, we only build one of the world's largest heavy earth operations at the moment in Brazil. So again, we know what it actually really takes to develop such an operation, and it takes many years, and again, carries very elevated execution risk. So for example, you take neodymium, just to use one of these elements that are used for the permanent magnets for wind turbines and motors in electric vehicles. I mean, you'll need between 180 and 200% higher annual production of neodymium, for example, by 2040 to satisfy the current demand forecasts. Yeah. Now, in China, mines are being closed down for environmental reasons. The mine grades in China are going down. Most well-promoted, on the equity market, well-promoted rare earth projects are not going to work technically or metallurgically. We know that after having spent a decade in that space. So we actually also think that rare earth elements are going to be really an issue. It's not just geopolitics. It's also the fact there's actually not many reasonably low-cost, metallurgically feasible rare earth projects out there globally. And it's a technically very, very complicated space. Yeah. Because there's a lot of mineralogical settings in which rare earth can occur, but there's only very, very few that actually have a history of successful commercialization, with the Ionic clays in southern China being actually the only mineralogical setting for earth where you'll have about a dozen reference operations globally. And most of the other ones are literally first-time experiments to actually build a mine within a certain metallurgy mineralogy. And it's complicated. So, and it's actually not just the mine. Then you actually need the separation plant, and who is going to take the capital risk to build the separation plants? because most attempts to build separation plants outside China today have actually been a disaster for investors. If you look at the history. So what is required is really maybe government-sponsored risk capital to actually willing to assume the trial and error phase that might be necessary to put the separation capacity in place in the Western world. So to say, so all of that is complicated. So this is why I actually think most metals or minerals that are required for the electrification, there are some real bottlenecks in the project pipeline itself, or just in the technical reality. And on the financing side, for example, you take a look at what WoodMac thinks. So WoodMac think that by 2035, in a number of metals and minerals, you need $1 trillion of investment in mining to satisfy demand. Yeah, and that doesn't seem to cover all the metals and minerals that you actually require. Even that for the public markets, even if the money is readily available now, also here you will see financing constraints on the public markets. Because the public investor pockets are not going to be deep enough to be willing to assume that execution risk in metals and mining for such amounts of money. So ultimately, I also think financing is going to be a major constraint because the numbers are just so big.
And I suppose, do you have solutions to these types of bottlenecks that you're talking about? Tough question.
Not for all of them. I mean, for Francis Shelvane, I mean, money is by definition finite. Yeah, I mean, either it's there or it isn't. The project pipeline is, I mean, you'll have to mobilize a much more risk capital in exploration than is being mobilized today. The problem with exploration risk capital is by definition subject to binary outcome. You can lose it if there's nothing in the ground. So ultimately the question becomes how much capital is out there that's willing to subject itself to the risk of binary loss for exploration. Because, I mean, in Australia, you'll need, for example, a lot of what people call deep cover exploration, right? To actually find the next game-changing deposits, right? Because, a lot of the easy stuff that's infrastructure-wise available has already been properly explored, Deep cover exploration costs several times more than what's been cost in it. So all of that, there's significant risk capital associated, but it's needed because the deposits do not exist. I mean, in copper, for example, the energy transition over the next 20 years, just the energy transition alone is going to result in approximately 10 million tons incremental annual copper demand. 10 million tons. That's 8 times Escondida approximately. Yeah, there's only one Escondida on the planet. The last time that a large copper deposit has been discovered on the planet was Kamoa 13 years ago. Yeah, 13 years ago, the last major copper discovery on the planet. Mined grades are declining, yeah, and that's only the incremental demand as a result of energy transition, those 10 million tons. So then you consider there's actually also copper demand from other demand drivers that got nothing to do with energy transition, like building new buildings, people buying new TV sets, et cetera, what have you not. And then you are standing at 15, 16 million tons incremental annual demand, like another 13 Escondidas. And that's despite us actually assuming that recycling increases fivefold. So it's just really, really, really hard to see where that project pipeline is going to come from. I think it was not an answer to your question if I know a solution. I was just going on about the same challenge, but a lot of new exploration money is part of the solution, but where it's going to come from, I'm not 100% sure, to be honest.
I think, I would follow on with that, saying that we're quite good as a species at being inventive and finding things. In 2014, hard rock lithium was pretty much nowhere. Everyone said it was too high cost, doesn't work, apart from one very high grade special mine in West Australia. It was either brines or nothing. So I remember sort of some very negative comments on hard rock lithium back in the day. It doesn't really work. look at where we are now. We've discovered deposits all over the world, multiple tier 1 deposits, hard rock deposits for spodumene that have been discovered or sort of rediscovered and grown to a tremendous extent. And, hard rock has 60% of market share now or thereabouts. So I think it can change very quickly. I think, obviously, we think from our perspective for lithium and perhaps for some other metals as well, particularly given sort of carbon footprint concerns, we think geothermal brines will have a big part to play. And I think, more unconventional deposit types such as clays as well will have a part to play. So I think it's just about unlocking, there's untapped resources that haven't been looked at before and just coming up with creative solutions to get there. I think we'll get some of the way there, if not all the way there in terms of the demand.
And with kind of this kind of the lack of exploration, there's been a lot of talk about the role of recycling and the potential role that it might play. Do you want to provide some insight into where we are, if recycling is going to play a significant or a greater role moving forward?
Well, in a growth model, first of all, by definition, as demand continues to grow, recycling can never fully satisfy demand. So first of all, that's just a mathematical reality. But as I've mentioned before, recycling is in many cases not that easy technically, right? You take copper, for example. Global copper production, they would have 22 million tons or something like that, right? And then you have 1.5, 2 million tons of recycling on top. So it's only a very small fraction. And there's a reason for that, because you got to collect all the scrap, then you got to separate all the various metals and the elements, right? And then you have metallurgical processes. So it's in many cases just not cost competitive, right? And if you incur all the logistics costs, so there's a reason why it's only a very small percentage of global supply. And as I said before, even if you assume the most dramatic increases in recycling, there's still a huge supply gap. Has it a role to play? Of course it has a role to play, because it's a percentage of supply and it's a growing percentage of supply. But at least according to all the information that we are looking at, that's technically very informed, the vast majority of supply will have to come from new mines.
Yeah, I'd agree with that. In theory, it's all recyclable, all these metals that we're producing for batteries. I'm sure it won't be 100% efficient, but someday we'll get to that point where hopefully the majority will be from recycled sources. I know that's the ambition in the EU. But as Bert said, there's a long way to go before we actually get enough metals into the global supply chain, battery metals that we need in order to, have recycling as a more significant component of supply.
And so want to ask the audience if they have any further questions for our panelists. We have one that's come in, really kind of following on from an earlier discussion, asking, if you're looking to do exploration, where do you find, who is financing this? Where are the investors that are more able to take on that risk that we were talking about?
Well, the public markets quite readily, as Francis says in the beginning, the public markets quite readily finance it today, right? I guess my query is just that the quantum that is required of exploration to generate the number of new projects that you actually need to satisfy demand, yeah. I'm not sure if the public markets or anybody else is willing to finance that quantum of binary risk capital, right? So I think that is the question, right? There's no doubt that at the moment, if you have an entrepreneurial junior mining company with a prospective land position, yeah, where there's some whatever promising surface signature, or so on, there is no doubt that in today's market you can actually raise that money for that exploration activity, right? But you'll need a lot more exploration than you currently have ongoing to generate that future supply base that's needed. So that's my point. The exploration spending would have to ramp up much, much more than what's being financed today. And I'm not sure if that incremental capital on top of what is available today in the current bull market, I'm not sure if that incremental money is there. So that's my point.
Yeah, I have nothing to add to that. I think that sums it up very well. I also noticed that there was a comment in the chat about with carbon footprint, is it scope 1, scope 2, or is it scope 1, scope 2, scope 3? I think we're going to see increasing scrutiny in that space, and not just for battery metals. I think scope 3 very much has to be in there.
And that's also an interesting point. I think in future, increasingly, I think we'll have mining operations actually charged very much by how low they can be on scope 1 and scope 2 emissions, right? And I think today you still look very much at cost curves for various metals to see if it's competitive throughout the cycle, and people will continue doing that. But I think incrementally, people will also look at the kind of CO2 emission curve per unit of metal. Like, you know, I wouldn't be surprised if in 3 years from now, people will say, in addition, if you have a gold project on the gold cost curve, well, what is your CO2? What are your tons of CO2 per ounce of gold? And that's going to be a very interesting conversation, because when that actually flows into the investment decisions.
I would take that a step further. I think gold mining will stop altogether very, very shortly. The way it's going, we don't need to mine gold.
Fair point.
You've got enough gold in the system. The small amount that's needed for jewelry and electronics, most of it's for investment.
Yeah,
goes back into the ground anyway. You don't need to mine it. And the way climate change is accelerating, I mean, I think the only reason it's gone under the radar so far is because it's been smaller, but it still has the carbon footprint of a South American country on a per annum basis. You don't need to mine it. It'll the way things are accelerating, I think it'll be gone in a very short space of time. So
Francis you and I are not going to speak at the next Denver Gold Forum. That's for sure.
Well, I mean, I'm
happy for that comment to be recorded. That's good fun.
Well, I mean, even the diggers and dealers this year, I think there was a feeling that perhaps has not been there before, and there was some things that have been said which have not been there before. So I started my career in gold. I have very fond memories of that, but I think its time has come. And I mean, you look at iron ore, for instance, and the scope 3 is there. From an iron ore miner in WA, 250 million tons per annum. That's the entire greenhouse gas emissions of the United Kingdom, for instance. Yep. So it's not this needs to be fixed. And I think it will be.
So we have some chat going on that people agree with you on the future of gold. Do you have any comments on the future of PGMs?
It all depends on the fuel cell, hey, huh? Because obviously diesel vehicles, are gonna be sold less and less and less as more EV vehicles are gonna get. You also need less and less catalysts, right? So, I mean, when you look at conventional charts, who are the winners and the losers amongst the metal basket of the electrification, I think you would have seen very often that PGMs are actually the losers of this. But then again, the battery technology, it's all work in progress. It's all evolving. I mean, if one day you have fuel cells, PGMs are going to be big winners. In the absence of fuel cells, not so sure.
Yeah.
And sorry, go ahead.
No, nothing to add. I think that, I agree with that.
So I have one more question from the audience. I think we have room for one or two more before we wrap it up. So how will Europe work towards supply of 1 million tons of local lithium if they want to be self-sufficient?
Sorry, the question again, how will Europe?
So how will Europe work towards a greater supply of local lithium if they want to be self-sufficient?
The Europeans? Okay.
Well, it's a loaded question for me because I'm running a European lithium company. So, I mean, we think, I come from obviously a a background in Europe, as you can probably tell from my accent, and working in the mining industry. And it is incredibly hard to permit mines in Europe, even undergrounds with a low footprint. Open pits, almost impossible, I would say. And underground mining for lithium currently doesn't work economically. And most of the projects in Europe, the hard rock projects, are quite small, with the exception of Dar, which is obviously a new type of mineral. So it's complicated. I think your best chance of doing something is probably in the Scandinavian countries, because they have more of a recent precedent and history for mining. So I think that's your best chance. And there's less people in the backyard. There's less NIMBYs, I guess, who don't want to have these projects in their backyard. We think that the future is from geothermal brines, because we have this very, very large resource in southwest Germany going into France, essentially a deep reservoir, and your surface footprint is almost negligible. You're talking about a couple of wells to pump this brine up, and a geothermal plant and some extraction tanks. There's no scarring of the landscape. There's no open pit mines or underground mines. You're not mining, essentially. You're just taking the lithium out of the brine and producing renewable energy. So that's how we see the future. I think hard rock mining definitely has a place, but I can't see it happening essentially anywhere that's densely populated. I think Southern Europe, Western Europe for mining won't work. Even Eastern Europe will be difficult. I think Scandinavia is probably your best bet.
And then the other things, just adding on to that, you need, as you say before, you need ore bodies of critical size, right? Because to build the spodumene plant, right? I mean, the optimal is like you have like 20 to 30,000 tons of output, so you probably need 200, 300,000 tons to go in, and that requires a large mine, right? So I mean, there's a number of lithium deposits in Europe, but if you look at it, I mean, they're almost all of them actually subscale from the point of view actually what's required to justify building the downstream. So
yeah, once again, I think Scandinavia is probably your best bet. I mean, if you look at the Kola Peninsula on the Russian side, you have some of the world's largest spodumene deposits there. There's no reason why you can't find it on the other side in the Fennoscandian. With more exploration, I think, undercover in the glaciated areas. So I think it'll be found. It just needs more input and effort. But yeah, 100%. And it's difficult to blend different small spodumene deposits together in one processing plant. So I don't think that's really a workable solution.
Yep, agreed with that.
Okay. That just about wraps us up for today. We've got one final question, just kind of asking about the midstream value chain. So looking at processing and refining, do you see greater challenges in financing in this space as compared to the mining space themselves?
I think it's important to have the right sort of strategic partners as part of that for miners, because if miners are going integrated into the more chemical side of things, I think that makes financing easier. Really having the know-how of building and operating these chemical plants that you need.
Agreed with that. Miners are miners, so that the downstream shall be built by the people who understand the stuff, like large chemicals companies.
All right. Sounds great. Well, I think that's a really good place for us to close off this discussion. If there are additional questions, please feel free to send them through to myself, and we'll do some follow-up with the panelists later on. So we'd like to thank everyone for taking part today. And if you want to review the video, we'll have it ready to go in the next couple of days. So thank you to Bert and Francis for this discusve today. And
no, thank you for having us. It was a pleasure.
Thanks, Amy. Likewise. Good to meet you guys.
Hopefully see you all at a live event soon. So thanks, everyone.